Good morning, ladies and gentlemen. This is Butch Shorak. It is Monday, December 17th, 2012. This is Market Forecast for Options University. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the week that we just passed, and we see that as we look at the week, Dow was down, NASDAQ was down, S&P was down for the week, and we see the only up index for the week was the Russell 2000, up 1.48 points. We see that the amount of change for the week is very, very little, or really minuscule, so a pretty flat week as we look at the overall week, with the Dow down 0.2%, NASDAQ down 0.2%, S&P down 0.3%, and the Russell up 0.2%. Look at the year-to-date as we see all of them in double figures, except for the Dow, which was is only up 7.5% for the year. Now notice we had much stronger numbers earlier in the year, but as we go into this fiscal cliff, it certainly has thrown some monkey wrenches into the market as to its year-end close and Christmas rally. This should be the strongest quarter of the year, and so far we've seen a little or nothing come out of it. Looking at economic announcements for the week, we'll take a look real quick and we'll see, oh yes, we are in options expiration week. We are in quadruple witching week, what that means that since 1982, when the S&P index futures began trading in 1982, the stock options, the index options index for futures and single stock and ETF futures all expire at the same time. This happens 4 times each year, and December is one of those months when this phenomenon occurs. December's option expiration has a very, very bullish history, as it should be the strongest quarter of the year. In fact, the week of options expiration and the week after have been the most bullish record of all triple witching expirations. However, the record is not perfect, as we see that in 2011 the European debt crisis derailed December, and it very well could be in 2012. The fiscal cliff could do exactly the same thing, as we've been going sideways for this entire month, which we should be heading up as we close into the year, which affects, of course, on Wall Street all of their bonuses for the year. Looking at the week, what do we have? We start on Monday at 8:30 with the Empire State Manufacturing Survey, could be of interest. Housing Market Index takes place on Tuesday. On Wednesday, we've got housing starts at 8:30 as we get some of these monthly numbers coming in for last month. And then we take a look at GDP to find out how that will be changed from what was initially announced. Looking at jobless claims, which will look at last week's jobless claims. So it's last week, by the way, when the announcement came out, it was very favorable. We'll see what it looks like this week. And then on Thursday, which is one of the heavier days as far as economic announcements for the week, we've got existing home sales at 10, Philly Fed at 10 o'clock. And then finally on the quadruple witching day, which certainly brings some volatility many times into the market, we have at 8:30 durable goods taking place. We have personal income and outlays, and then consumer sentiment coming out at 9:55 on Friday, the quadruple witching day. So we've got announcements this week, and we've got options expiration week. And for you option traders, you know it's much harder to get your fills this week than it seems to be on other weeks. Just seems to be a trend that we see in the market. Where will the fiscal cliff go as we go into the end of the month? What will it do to the market? That remains to be seen. It is a time of uneasiness. So if that's the case, I wonder what the VIX will show us, and we'll look at that in a little while. Looking at last week, looking at the SPX, we see that for the SPX, we are now in a down cycle, getting lower highs, lower lows. We are 30-day and 50-day moving average have flattened out as we go into this sideways trend, spending time above the 30-day moving average and below the moving average. So we are in a sideways overall trend, and we are in a down cycle in that trend, having hit the 50-day moving average on Friday as we found that to be our close almost exactly. Can we expect to go further down? Where we will go as the week goes on? Well, let's take a look and analyze this a little bit further. We were in an up cycle on our sideways trend as we went into last week, and we see that on Monday we had kind of a nothing day. Tuesday we had a big up day. Wednesday we got what looked like a potential reversal signal, which of course got confirmed on Thursday as we had a big old red candlestick bouncing down to the 50-day moving average on Friday. Until this trend changes with higher highs and higher lows, we can expect to go lower. How much lower could we expect to go? Well, we could go down to this 1370. I doubt that, but that certainly is possible as we are dealing with this fiscal cliff. We may come down to the moving average. We'll see where we go. Watch as the day develops. What are we getting? Are we getting higher highs and higher lows, or lower highs and lower lows? But the trend is sideways as we are moving both above and below the 30-day moving average as we look back during the month of November and December. Could pull back to this 1398. The last time we pulled back there, we had a big move up. Notice when we hit the 30-day moving average, what happened? Here we hit the 200-day moving average. Boom, big bounce up. Could come down and hit this 30-day. Could bounce off the 50-day. What's your key element? Higher highs and higher lows. Trade with the trend. It makes your job a great deal easier. Now, Monday in options expiration week is usually a strong bullish day if we look back through history, so we'll see what happens. Looking at the Dow, we're above that 50-day moving average, and we see that the Dow was down 35 on Friday, so we're in a down cycle in our sideways trending Dow. Taking a look at the NASDAQ for the week, we see that it looked very similar, although we didn't get as high of a move out of the NASDAQ as one might have expected, and we see that NASDAQ burdened by the Apple dilemma, with Apple showing decreased shipments of both the iPad and the iPhone due to manufacturing problems, definitely pulling the NASDAQ down with it, as the Apple was down considerably on Friday. All right, taking a look at the Russell 2000, the one exception for the week has had an up week. We look at the Russell 2000 and we see that is trading above all of its major moving averages right here, showing relative strength, typical for the Russell at this time of the year and typical for what we see out of the Russell as we go into the first quarter next year. Looking at the VIX, we see that the VIX is trading in the midline area, in the mid-zone area of its normal zone between 15 and 20, right at about 17. And as to be expected, the VIX went up as the market has been pulling back. We'll see how much further the VIX rises as we continue on this sideways trend, currently in a down cycle. Looking at some of the other indexes and sectors as we look at the overall market, what is the bond market doing? Look at it, TLT, which is our iShare ETF for bonds. We see that we got a little bit of a bounce on Friday out of the bonds, trading in a zone, trading in a pretty tight zone, not showing us any great strength or any big moves as the market just sits here and waits to see what's coming out of Washington, as it looks like they're probably going to let us fall off of that cliff. Could there be a last-minute 11th hour resurrection? There could be. We'll see what happens as we head toward the end of the year. Looking at the financials, we look at XLF, which is the Spider Select Sector Fund for the financials, and we see that as the week went on, trading within that yellow zone and pulling back a little bit with the overall market to be expected. But notice that as we look at the financials, showing relative strength of the overall market as QE3 smiles greatly on the financial sector of the market. Taking a look at oil, let's take a look at the the oil sector, and we see that it is going nowhere, trading sideways, kind of thing where you that are option traders, you can basically use some of your strategies where the stock is going absolutely nowhere. Looking at gold, we see exactly the same situation, going nowhere fast. And so as we look at GLD, our ETF for gold, giving us some kind of an indication of what the sector's doing. We see gold going sideways. Here we are, fourth quarter should be strong. Basically, nothing happening in much of any of our sectors. What kind of volume did we have last week? As we had a basically topping pattern with a couple of pullback days. Let's take a look at the Spider ETF and find out exactly what that did for us. What kind of volume did we have? Well, listen, we basically had, as we pulled back and got a topping pattern, we had stronger than average volume as we're sitting right up there. So we're pulling back with a little bit of volume. We'll see whether we have follow through. Chances are, until we get to that last week before the fiscal cliff, we're probably not going to have any big moves in the market. Would expect this to be a rather flat week when it's all said and done. So it just keeps chugging along, waiting for Washington to provide leadership, and I guess you have to decide whether we're getting that leadership or not. As we see the impasse take place, we basically got gridlock between the Republicans and the Democrats as we're fighting for our entire country's financial future. Well, with that thought, let's say this is Butch Shorak, and this is Options University. We had an interesting week in the market. For those of you that are gold members, stick around. We'll take a look at our stocks to watch. For those of you that are not and would like more free videos, go to www.optionsuniversity.com/free gold. With that thought, this is Monday, December 17th, 2012, my wife's birthday, and I certainly wish her a many more birthdays to come. This is Butch Shorak. It's Options University. Thank you so much, ladies and gentlemen, for being here and sharing your time. And to our gold members, welcome back. Let's take a look at our list of stocks to watch as we're going to take a look and see which of these stocks provide for us relative strength as we go into this slight little pullback, this little down cycle in our sideways trending market. Which are the strongest stocks? Those are, of course, the stocks that most likely will be the first to move when the market decides to reverse and head up into an up cycle. So the first thing we're going to take a look at, let's take a look at Amazon, and we see, look at that. What kind of relative strength is this showing us? We're in a sideways trend. Yes, Amazon is moving sideways, and we are in a down cycle in the overall market, but look at this thing is showing us a tremendous amount of strength in this. This thing heads up. It probably will break up, heading for some of these previous highs. So this is a stock to watch. Could be a bullish play here as we break out with the overall market. Very likely you'll start getting higher highs and higher lows on Amazon. Also heading for a cross here. Of course, this all depends upon what the overall market does relative to the fiscal cliff, but currently the 30 is below the 50, but we are headed looking for that crossover there, which for many of you traders might be a buy signal. Looking at Amazon, showing good relative strength to the overall market. Next, let's take a look at Applenomics and see what Apple's doing, and we see Apple headed down for that 500. On Friday, had a huge down day, down about 3.5%. Most of its suppliers down 3.5%, as Apple's having trouble with deliveries on both iPads, iPhone, manufacturing difficulties coming out of China. And what we will see is we may see Apple become more dependent in the U.S. as to production for some of its products. Where are we headed? Well, it looks like we could go lower. If the market goes lower today, we could go lower and break through this previous point here, headed for that 500 and see what happens. Watch for higher highs and higher lows. As you know, we can get a bounce off of Apple, and so if we look at our trend line, we see that it looks something like that. All right, so where do you expect for a target? Somewhere along that trend line as we get a bounce out of Apple. Looking for higher highs, higher lows, as we know Apple does have that ability to move as one of the darlings of the market, but certainly in a downtrend, as Apple is not showing any of its previous strength, but having to do with expectations with lower earnings, with lower sales because of problems in delivery. AutoZone, which is near the very bottom of its range that it typically trades in, looking for a bounce on that. We see that this stock typically trades between 355, 390. What happened with earnings? They weren't all that impressed with earnings as we pulled back after earnings, but still hasn't broken down below our previous trading zone. If this thing does break down below, you'll have to look at a longer term chart to find out what kind of target you have to the downside. Looking at some of our food companies, let's take a look at CMG. See that is showing good relative strength. Looking at this chart, we see that we've closed that gap which took place from the previous earnings, and we see that it is trading near its high. Last week, as the market pulled back the last 3 days of the week, this thing looks like it wants to go higher. Look for a breakout above this point as a potential bullish entry on CMG. All right, so it might be a little bit of a move there in CMG if the market decides to go up on this week of options expiration. Looking at Google, we see that it also showed some good relative strength, the overall market. Pull back the last 3 days, and meanwhile, this thing has tended to move somewhat up, so potential there for showing good strength, heading towards a potential crossover. Market has an underlying bullish tone to it, but the fiscal cliff seems to be holding everything back. Let's take a look at Green Mountain Coffee, which had a very nice earnings move, and we see that it is looking for new highs. If it breaks above this point at 42.50, we could have a potential entry for a bullish trade on Green Mountain Coffee. ISRG, which also had a very nice move after earnings, has been going nothing but sideways, but showing good strength as this company has been a leader in the past and could lead us if we do finally break out and get some kind of cooperation out of Washington, and they do their job. Next, let's take a look at MasterCard, showing great relative strength, one of the few stocks that we're looking at that has a 30, 50, and 200 in the proper order, where the 30 is above the 50, 50 is above the 200. Looking for good strength here. When you get higher highs, higher lows, you can expect some kind of move out of MasterCard as it is smiled on by QE4. Looking at another food company, the largest in the world, McDonald's, we see that it basically had a very nice upward move, and we see it had a little bit of a pullback with the overall market. 200-day moving average acted as resistance, as we see a kind of a mixed signal here as what is the trend of McDonald's. Well, we certainly had a nice upcycle here, so watch what the overall market does. It certainly will influence McDonald's. Looking at Nike, we see Nike is basically broken out of its previous tight trading zone where it spent almost a month, and we see whether we develop a new trading zone as, again, we're coming into earnings, so maybe getting a little close for any kind of a play in Nikes unless you'd like to do some kind of earnings play. Next, looking at one of our travel companies, Priceline, a stock that certainly is known to move. Wow, what a pullback this thing has had, as we see it coming down below all of its moving average, and it can certainly move with the overall market, but not showing any kind of the strength that Priceline used to show. Still trading well above $600 though. And finally, let's take a look at our last stock, WW Grainger, trading in a sideways range, not showing as much relative strength. Type of stock where you use one of your strategies where you make money on a stock that is going absolutely nowhere. And so with that thought in mind, we have another week waiting for the fiscal cliff to fall and see exactly what's going to happen to this economy. Bullish undertone to the market, certainly has the ability to go up. Corporations are ready to move this thing up. Institutions are ready to move this thing up. But the real question is, can we get enough cooperation from our leadership so that there is such a decrease in this lack of uncertainty in the overall market? With that thought, on behalf of Options University, this is Butch Shorak. I'd like to take this opportunity to wish you thanks for being here, and we will see you again next Monday with Market Forecast.